This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus will likely maintain steady oil output at its meeting on Sunday, 3 OPEC Plus delegates said on Friday, despite political tensions running high between key members Saudi Arabia and the UAE over Yemen. Sunday's meeting of 8 members of OPEC Plus, which pumps about half the world's oil, comes after oil prices fell more than 18% in 2025, their steepest drop since 2020 amid growing oversupply concerns. The 8, Saudi Arabia, Russia, UAE, Kazakhstan, Kuwait, Iraq, Algeria and Oman, raised oil output targets by around 2.9 million barrels per day from April to December 2025, equal to almost 3% of world oil demand.
Oil prices settled lower on Friday on the first trading day of 2026 after registering their biggest annual loss since 2020, as investors weighed oversupply concerns against geopolitical risks, including the war in Ukraine and Venezuela exports. Brent crude futures closed down 10 cents to $60.75 a barrel, while U.S. West Texas Intermediate crude eased 10 cents to $57.32. Russia and Ukraine traded allegations of attacks on civilians on New Year's Day despite talks overseen by U.S. President Donald Trump, aimed at ending the nearly 4-year-old war. Kyiv has been intensifying strikes against Russian energy infrastructure, aiming to cut off Moscow's sources of financing for its military campaign.
Moving on to the top news in the energy sector.
Onshore fuel oil stockpiles in Singapore climbed above 26 million barrels during the final week of 2025, well above average for the year, data showed on Friday. Inventories rose to 26.75 million barrels, about 4.21 million metric tons, in the week to December 31st, up 4% from the previous week, data from Enterprise Singapore showed. Fuel oil inventories averaged 22.8 million barrels a week during 2025, compared with 19.7 million barrels in 2024, historical data showed.
India is asking refiners for weekly disclosures of Russian and U.S. oil purchases, people familiar with the matter told Reuters, adding that they expect Russian crude imports to dip below 1 million barrels per day as New Delhi seeks to clinch a trade deal with Washington. India became the biggest buyer of discounted Russian seaborne crude following the 2022 outbreak of the Ukraine war. But those purchases have fueled a backlash from Western nations, which have targeted Russia's energy sector with sanctions, arguing that oil revenues help fund Moscow's war effort. The United States, which was already looking to narrow its trade deficit with India, doubled import tariffs on Indian goods to 50% last year as punishment for its heavy purchasing of Russian oil. The two countries are currently negotiating a potential trade deal, though those talks have been fraught at times. Next, we have the top news in metal markets. Nickel rose to its highest in more than 14 months on Friday after Vale's Indonesia operations suspended mining activities, while aluminium began the new year by crossing the $3,000 mark for the first time since 2022. 3-month nickel on the London Metal Exchange rose as much as 1.8% to $16,950, the highest since October 2024, as funds covered short positions. It was trading up 0.9% at $16,785 as of 1700 GMT. PT Vale Indonesia Tbk was unable to carry out mining operations because of a delay in approval for its annual production plan, it said in a stock market filing.
Gold traded at a premium in top hubs India and China for the first time in about 2 months this week as a correction from all-time highs helped lift retail demand, which had been hit by an unprecedented rally in prices. Indian dealers charged a premium of up to $15 per ounce over official domestic prices this week, inclusive of 6% import and 3% sales levies, up from last week's discount of up to $61. Domestic gold prices traded at around 136,700 rupees per 10 grams on Friday after hitting a record high of 140,465 rupees last week.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures fell and booked a weekly drop on Friday, their first trading session of 2026, as traders digested sluggish export data from cargo surveyors and awaited December production figures for further price guidance. The benchmark palm oil contract for March delivery on the Bursa Malaysia Derivatives Exchange dropped 1.48% to 3,990 ringgit, $984.70, a metric ton at closing. It lost 2.42% for the week. Malaysian palm oil product exports for December declined between 5.2% and 5.8% month-on-month, according to cargo surveyor Intertek Testing Services and inspection company Spec Agri Malaysia in their reports released on Wednesday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.